There's a category of financial loss that doesn't require any decision on your part. No impulse purchase, no subscription you forgot about, and no coffee budget you blew. Through in the first week of this month, though, just money leaving your account automatically, continuously, and in amounts small enough that they don't register as individual losses, but as significant enough that they add up to something you'd be genuinely angry about if you saw it as a single number. I went through 12 months of bank and credit card statements for this video and added up every fee I paid in a year that wasn't for a service I'd chosen and valued. And the number was $847. $847 in fees I'd paid to financial institutions, platforms, and service providers for the privilege of doing business with them. And here's every category, what industry average looks like, and how to eliminate most of it before it ends, before the end of this week, even. The fee ecosystem and how it's designed. Before the specific categories, the design psychology behind the fees ecosystem is worth understanding because it explains why these fees are so effective and why eliminating them requires deliberate action rather than natural discovery. Financial service fees are architecturally designed to be below the threshold of active attention. A $12 monthly maintenance fee on a checking account is $144 per year, a meaningful amount that would generate real resistance if presented as an annual charge. As a monthly line item, though, it mixed in with dozens of other transactions, it generates almost no response for most account holders. The fee processors know this. The fee amounts are calibrated to sit below the friction threshold that triggers cancellation of or complaints, which is why $8 and $12 and $15 per month appears so frequently across different fee categories. They're the range that maximizes revenue while minimizing customer action. The second design feature is complexity. Fee schedules at most banks, brokerage accounts, payment platforms, and subscription services are long, specific, and written to make it difficult to understand what you're paying for and why. This complexity is not accidental either. A customer who doesn't understand the fee structure can effectively challenge it. And a fee they don't understand tends to be accepted as a cost of doing business rather than eliminated as an optional charge. And understanding both features, calibrated invisibly and deliberate complexity, explains why the average household pays $500 to $1,000 per year in financial fees they could eliminate with relatively simple changes, and why those changes require intentional audit rather than passive notice. Category number one, bank account fees. The most common and most eliminable fee category for most people monthly: maintenance fees, the minimum balance fees or overdraft fees, ATM fees, paper statement fees, and wire transfer fees collectively extracted over 8 billion from American bank account holders in 2024 alone. And most of this came from account holders who didn't know they were paying it or believed they had no alternative. Monthly maintenance fees ranging from $8 to $25 per month are charged by most major retail banks on standard checking accounts unless the account holder meets specific conditions. The minimum daily balance, direct deposit minimum requirements, and minimum number of monthly transactions. And many account holders pay these fees despite meeting the waiver conditions because they don't know the conditions exist or because the condition that was previously met has quietly lapsed. Call your bank and ask three specific questions. Am I paying a monthly maintenance fee? What are the conditions to waive it? Am I currently meeting those conditions? And you may discover either that you're paying a fee you can eliminate with a small account behavior change, or that you're paying a fee on an account that you should move to a credit union or an online bank that doesn't charge it. Online banks like Ally or Marcus, SoFi, and similar institutions charge zero monthly maintenance fees on most accounts because they have no physical branch network to subsidize. For anyone who doesn't require in branch banking service, an online bank eliminates the largest single fee category entirely with a one time account opening process that makes 20 minutes. Overdraft fees are most regressive fee in the banking industry, charged most frequently and most severely to account holders with the least financial buffer. The standard overdraft fee of $25 to $35 per incident is applied to transactions as small as $2, meaning a $3 gas station purchase can trigger a $35 fee. And that represents 1,100% charge on the transaction value. Opt out of the overdraft coverage entirely, which means small debit transactions will be declined rather than approved with a fee, or link a savings account to your checking as overdraft protection at zero cost. Declined transactions are inconvenient, and $35 fees on $3 purchases are financially devastating for anyone running a thin margin. Category number two, investment and brokerage fees. Investment fees are the most damaging fee category on lifetime basis and the most thoroughly invisible one because they typically don't appear as separate line items. They're embedded in the expense ratio of the funds you hold. A fund with a 1% expense ratio charge you 1% of your invested balance per year, regardless of the fund's performance. On a $50,000 portfolio, this is $500 per year. On a $200,000 portfolio, it's $2,000 per year. Over a 30-year investment horizon, the compound effect of a 1% fee versus a 0.03% fee, which is the broad index funds from Vanguard, Fidelity, and Schwab charge, represents hundreds of thousands of dollars in wealth not built. A specific example, $10,000 invested at 7% annual return over 30 years grows to $76,000 with a 0.03% fee. With a 1% fee, it grows to $57,000. The fee consumed 19,000 in returns on a 10,000 initial investment, nearly twice the original principal paid to fund managers for performance that has historically been worse than the index they're managing against. Checks the expense ratio on every fund you hold. If it's above 0.20, you are likely in an actively managed fund whose historical performance does not justify its costs. Transfer to low cost index funds. This is the single highest leverage fee elimination available to most investors. It requires only a one time account change. Category number three, payment and platform fees. The modern financial life involves a growing number of payment platforms, money transfer services, and financial apps that charge fees that most users don't examine closely. PayPal. I've cut PayPal completely. They're crooks, especially on their insurance for eBay. Oh my God, they're terrible. Cut Venmo, Cash App, and similar platforms charge fees for specific transaction types that many users pay without realizing alternatives exist. Venmo charges 3% to send money via credit card, a fee that is zero for debit card or bank transfers. And PayPal charges a 2.9% fee on goods and services transaction, standard for merchants and avoidable for personal transfers that use the friends and family's options. Cash App charges 1.5% for instant deposits of your balance to a bank account. The standard free transfer takes 1 to 3 business days at zero cost. These fees are incurred millions of times daily by users who don't know zero cost alternative is available. Credit card foreign transaction fees of 2 to 3% apply to every purchase made outside of the United States or on foreign currency websites. For anyone who travels internationally or shops from international retailers, this fee accumulates quickly. A no foreign transaction fee travel credit card, Chase Aspire, Capital One Venture, and many others eliminates this fee entirely with no other trade off. Wire transfer fees of $15 to $35 per transaction are charged by most banks for domestic wire transfers, for real estate transactions, and large business payments where wires are required. These fees are often unavoidable. For most personal transfers, ACH transfer, which is free at most banks, accomplishes the same transfer in 1 to 3 business days at zero cost. Category number four, late fees and interest penalties. The category is distinct from the service fees because it's generated by account behavior rather than account structure. But it belongs here because the fees amounts are staggeringly high relative to the triggering action and because the financial institutions make them difficult to avoid through strategic design. Credit card late fees are $25 to $41 per instant, are assessed when a payment arrives after the due date, regardless of how late it is. A payment due on the 15th that arrives on the 16th incurs the same fees as one that arrives on the 30th. The due date is not a grace period, it's the last day before the fee is assessed. Setting up automatic minimum payment drafts from your bank account eliminates this fee category entirely at the cost of one 15-minute setup process. The late payment secondary consequence at 29.99% penalty APR applied to full balance is more expensive than the fee itself for anyone carrying a balance. One missed payment can trigger a rate increase that costs hundreds of dollars in additional interest over the months before it resets. Automatic minimum payment drafts prevent both the fee and the rate trigger simultaneously. The one afternoon that pays for itself to every fee category I've described is eliminated with a specific infinite action that takes between 5 and 30 minutes per category. Move to a no fee checking account, transfer high expense ratio funds to index funds, and turn off overdraft coverage. Set up automatic minimum payments on all credit cards. Check payment platform transfer options before paying fees. Enable no foreign transaction fees cards for travel and take one afternoon. Go through each category, make the changes that apply to your situations. The fees stop, the money stays in your account, and it stays there every month, every year, indefinitely, because the changes are structural rather than behavioral, which means they don't require ongoing willpower or attention to maintain. $847 was my number for a year of fees I didn't need to pay. Yours is different. Find it, eliminate it, own it permanently. Thanks for watching. Check out this video to the right. And if you really like today's video, please subscribe. We're looking to build this channel, and I can't do it without you. So please subscribe if you like what you see, because otherwise we may not be here. We'll see you on the next one.